The jobs report for the U.S. economy for the month of July has just been released. The numbers seem to give us a glimmer of hope that the economy is improving. Could this be an outlier, or could this be the start of something much larger? Let's get into it right after this. Welcome back to another episode of the Crypto Stream, your trusted source for crypto news and general overall market news as well. We are breaking in today to talk about the jobs reports numbers that just came out for the month of July 2022. And what I'm sharing here is a small article that was put out earlier today by Yahoo Finance. And it says, and it's titled, Jobs Report, U.S. Economy adds 528,000 jobs in July. Unemployment rate falls to 3.5%. So let's go ahead and read more of this. It says the Labor Department released its last monthly jobs report at 8:30 a.m. Eastern Time this morning on Friday. Here are the key numbers from the report. So for unemployment rate, it was 3.5 versus an expected 3.6. So overall, that was better than expected. The average hourly earnings month over month. So in other words, the hourly earnings from this time last month were actually up 0.5%, which is better than 0.4. In addition to that, the hourly earnings year over year, meaning this time last year, was at 5.2% versus 4.9%. So as you can see, those metrics came in better than expected. But the big number to focus on here that came in just amazing was for the non-farm payroll. So basically, this is the unemployment, as far as the jobs being added. So it's actually the inverse. But the number of jobs that were added to the economy was 528,000 versus an expected 250,000. So basically, we blew that out of the water. We doubled that expectation. So that's a good thing. That's a good thing. So if we take a look at this, let's see here. We can see the unemployment rate percentage has been increasing from the start of the pandemic, which was January 20th, and it peaked out around this time in April of 2020, and it peaked out at around 14.7% was the unemployment rate. And as you can see, it's been decreasing as the months and months and the years have drawn by up into present, which is 3.5%. So I wanted to take a look at this graphic here because I think it kind of tells the story of our recovery so far in this now certified recession, because the definition of a recession is 2 consecutive negative growth of GDP. So 2 consecutive quarters of negative gross domestic product growth. All right. And so we basically just declared that after this last quarter, just past Q2, since we're now in Q3 of 2022. So this is the job loss and pandemic. Says it's fully restored. So if we take a look at this, it's really easy to kind of map out where we stand versus where we've come from. So if you look at the red drawing here on this chart, you'll see, and just to get your bearings here, so the y-axis here is basically telling you the change since peak unemployment, and then your x-axis is showing you the months after peak employment. So if we take a look at that, we'll see the red represents 2020, the yellow represents 2008, and the grayish color represents 2001, and the other colors represent 1990 and 1981. So let's focus in on 2020. As you can see, we started off obviously at 0, right? Because that's your base. And you'll see after 3 months, we dropped so low right there in 2020, right? We went all the way to 14%, above 14% unemployment. And then you can see the V-shaped recovery there. A lot of economists were speculating that would be the case, and it looks to be playing out that way. So we follow this trend all the way up, all the way through 2020, all the way into the number of months into present, which is about 30-ish months, 32 months or so, 31 months. We'll see that we basically regained all the jobs that we lost from the start of the pandemic. Now, if we compare that to the Great Recession of 2008, we'll see that, yeah, we really took a dive. It wasn't such a steep drop off like 2020, the pandemic there. It was more of a bowl shape, a U-shaped recovery. But as you can see, it took quite a while for us to get back. It went all the way to 76 months there, right? So you can see that, okay? That's one of the things that I wanted to point out for you guys to see. So if we look at some more graphs here, because graphs, I like them because they tell the story. So we look at this and we'll see, again, the monthly jobs growth was 528,000. And we can see there that 2020, just the nosedive. I mean, that was really a shock to the system. And also, as we talked about the unemployment, this is basically showing you the inverse of that last graph that I showed here. So as you go back and look at that, basically flip this on its head, because this is looking at over the months, you know, how we dropped down. And then if you look at this graph, it's showing you how we went back to where we started, right? So this is the inverse. So as you can see, we're currently at 3.5% unemployment. So if we look at the industries, these are only a select few industries, but if we look at those industries and kind of parse this out, you know, how the jobs were added. And again, this, just to give you an idea, this is in thousands. So for instance, to give you an idea where we stand. So construction added 32,000 jobs. Manufacturing added 30,000, wholesale 10.5 thousand, retail 21.6, government 57,000, professional businesses 89,000, education and health 122,000, and one that's very important is the leisure and hospitality industry. They added 96,000. Okay, so one thing I do like to do, and we're going to start doing this on our videos, just to give you guys a level set of where the market stands. Like, our focus here is on crypto, but we also look at other things besides crypto. We look at the general market, like stocks and things of that nature as well. But for today's conversation, I want to tie all of this back to where we stand as far as the fear and greed index. The fear and greed index is basically how we measure how much fear and how much greed is in the atmosphere for crypto. So the way to look at this is this way. So from left to right is the way you read it. Left, the further you go downward, the darker the color from the left perspective is the worse. The right, you look at it, the brighter the color going towards green is better in terms of fear. So if we look at this, we are given a score of 31 as it stands today. And as you can see, this was last updated today, August the 5th, 2022. And this score is made up of various factors, and we're not going to dive into that. We can save that for another video to dive into what the fear and greed index comprises or is composed of. But we measure this based on Bitcoin. Since Bitcoin is the holy grail of crypto, it's the granddaddy of them all, as I like to say, and it kind of drives the market. So if we look at the historical values for the fear and greed index, we'll see that today is 31. Yesterday it was 30. So we did rise about a smidget. So we rose about 1 point up. So we're still in that fear category. Last week, we had weaker fear, a lot better sentiment last week. And we were at a 39. And then last month, this time, we were really in the trenches there. We were at an 18, which is really low. As you can see, the deeper color there going real low. Now, one other thing I wanted us to do is to take a look at a video. The video that I wanted us to take a look at, it comes from CBS News, and it just summarizes everything that we discussed today very succinctly for you. It talks about the jobs report and how that blew out expectations, and also it talks about what this could mean for the future. So let's go ahead and take a look at that.
With the highly anticipated release of the July jobs report, it was a big month for job growth in the U.S.
The numbers from the Labor Department were much higher than what analysts had projected. Economists were expecting to see 250,000 new jobs added in July. The actual number was more than double that, 270,000 jobs higher.
528,000 jobs were added even in a month when summer hiring traditionally slows down. Daniel Zhao joins us now. He's a senior economist at Glassdoor. Daniel, your reaction?
Well, this jobs report was really a summer blockbuster. We saw that the labor market, even though there was some anticipated cooling, we actually saw that jobs growth was much higher than expected. And I think that this report hit some really nice milestones. We saw that the unemployment rate was back to pre-pandemic levels. Payroll employment is back to pre-pandemic levels. So it really just goes to show how dramatic and quick the recovery has actually been.
I want to follow up on that point, Daniel, because the other huge news out of this report is that unemployment rate falling to 3.5%. That's only a drop of 0.1%, but analysts like you are really celebrating this as a return to pre-pandemic levels. Were you expecting that to come out of this jobs report? Tell us more about the significance of this.
Well, I think we were actually concerned that there would be more significant cooling because we saw earlier this week job openings that had actually come down a little bit, and we saw that we've seen broader economic indicators start to slow as well. So the fact that we are continuing to see job gains very healthy, the fact that unemployment is coming down is a very healthy sign that the labor market is a pillar of strength, even though the broader economy is slowing.
What sectors are we seeing that are having the most growth?
Well, I think what's really interesting about this report is we've actually seen jobs growth across a whole host of different industries. Really, almost every major industry added jobs in this last report. And perhaps the most surprising thing is that even though we've been hearing about slowdowns in retail, in tech, in finance, all of those industries actually added jobs in July. So a very healthy report overall.
Daniel, you and I were talking a little bit before this show about some of the conflicting messages that people are getting in our economy right now. These numbers, obviously, a reason for celebration, but stocks took a nosedive when the report came out. Explain to us why that is and how overall you see the health of our economy.
I think some of that might be a reaction to how analysts, or how the market really expects the Fed to respond to this report, because we did see that wage growth came in a little bit hotter than maybe the Fed had hoped for. We did see that the job market is just hotter overall. And so I think that there might be some anticipation that the Fed will continue to tighten monetary policy maybe more aggressively than we had originally anticipated.
Interesting. And as your thought overall about the health of our economy?
I would say that the labor market continues to show that we are not on the brink of a recession. The labor market is still a pillar of strength.
It's a good takeaway.
Yeah.
Daniel, thank you.
Thanks.
And there you have it, guys. So as you can see, that's the sentiment that's out there in the market today. I just wanted to break in and give you guys this news about the jobs report that came out for July 2022, as our goal is to tell you breaking news, whether it be crypto or regular general finance in the stock market or the economy. And I think this was a great sentiment to give to you guys. And remember, do everything you do for you and your family. Stack that crypto so you can create generational wealth for you and your family. Take care, guys.